Okay, perfect. If no questions, then I think we'll get started, Karen.
Okay. Hi, guys.
Hello.
I'm Karen, and I am seeing more members of my group jump on. Thank you. Thank you, guys, for sure. Alex, Buddy's here. I think it's a nice representation of our group, too. I had reached out to them today, and I will just give you the reason that I'm going to probably be a little bit fuzzy tonight is I'm just getting over COVID. It got me pretty good. And I'm a nurse and I've been a nurse for 40 years and it put me down. So I probably have some brain fog. If I say something that doesn't make any sense, please stop me. I got Alex and Buddy and Julie and John and Darren. I got a bunch of people to answer your questions and help you out in the event that I am just not up to snuff here tonight. So my apologies initially before we head in, but I wanted you to know that I'm not always a buzz bomb for sure. So I wanted to just take a minute to let you know, and I'm not in the back alumni office very much, but I happen to see the best message from, and I think you're on tonight from I think it was from a Glenn.
Yes.
And it was, holy shit. I went through the whole course. I expected that I would be able to just follow, and I'm paraphrasing, obviously, but I expected I would be able to just follow the process. And this is absolutely not the case. Is anybody struggling like I am? And it's so true of where everybody was when we started. So the real learning begins after the course for sure. But I am here to tell you, and my folks too, that this formula, this process works. You just have to now go in, get your feet wet, back trade the hell out of it until you get a win rate of greater than 80%. Everybody on my team pretty much has a win ratio of greater than 85% up into the 90%. I have absolutely made money. My goal is to do multiple contracts this year and to hit the 80,000. One member of our group made over 100 grand last year and has made with very minimal trades this year that have been available. He's at the $40,000 this year so far. So if we can do it, you guys can do it. You just have to develop a level of confidence that the program works and trade it. And I do want to tell you that I love Dr. Fred to pieces, but don't even look at his trades. They are not appropriate for you as beginner trades. If you are a beginner, I'm assuming everyone's pretty much in the beginning. They will not make sense out of his trades. They will not follow the rules because he doesn't have to follow the rules. He knows what he's been doing. He's been trading a long time. And I want to read you one sentence out of an email he sent me recently, if I can find it quickly.
It's based on the 131 trade.
Yes, it was. It says, the trades, this is from Dr. Fred, and this was, well, it was in February. So it says, the trades I take at this point would not necessarily be good trades for someone with only 1 to 2 years of trading experience, or even someone with 3 to 5 years of trading experience. In other words, you look at them, don't dissect them, don't try to figure them out. Those kind of trades you'll be doing with a lot of experience. However, they will make no sense. They'll get you frustrated, and you know, you've made it this far in the program, and I think Alex chime in, Darren, Julie, we have a group that has absolutely made money doing this. You can do it.
Wow, good advice. Thanks.
That's Alex. Alex, you agree? Feel free.
I agree. I
Okay.
agree. I took my 5,000 account is over 10,000 right now. And it probably would have been a lot more, but but Karen, you should also tell him, Jim, his method for new traders. I think that'd be probably good for them also.
I do have that down. I'm, and I'm a little uncomfortable saying how much people are making because it's their own personal business for sure. So I'm not adding last names, from people of our group. You're just going to have to trust us. But I will tell you that this absolutely works. But the most important part, and I think everyone in my group will agree with this, is the back trading. You have to back trade your two commodities a minimum of 10 times before you get comfortable being able to somewhat anticipate what the next day trade is going to be. There's, as Dr. Fred says, the market moves only three ways: up, down, and laterally. The market is in a lateral move for 80% of the time and up and down for 20% of the time, most of the time. Now, it has been a crazy year for bonds and notes. It is probably a commodity for those with experience because there's been very few crossovers and very, very long trends. But I'm telling you, even without having any crossovers, when you get good at your back trading and you get your win ratio up to 85%, you will figure out the other very small nuances to watch when you look at each individual candle to decide whether you're going to make a trade or not trade. Essentially, this whole process comes down to exactly what Dr. Fred said. Look for a crossover. Everything starts with the crossover. Then get really, really good at defining support and resistance and swing highs and swing lows. Now, most of you use Trade Navigator. A couple of us, Buddy and I, use NinjaTrader. There is an indicator available that will, I think, do swing highs and swing lows. But there's nothing out there that I'm aware of that is a good indicator to show you where the support and resistance lines are. But you have to know support and resistance like that. You could almost trade, and Alex really defined this in our group pretty early on. You could almost trade the market by using only support and resistance. And most of the mistakes you're going to make in back trading are probably because you did not correctly identify support and resistance. And Alex just made mention of one of our members. Jim is actually training his wife, 2 daughters, a brother-in-law, and somebody else, and they didn't go through the syllabus. They know nothing about trading, and all he is having them do initially to start is to go back a year, look for a crossover, make sure the parameters are, the rest of the parameters are correct, and I'll go over those in a minute too, and put your support and resistance lines in. If you don't know support and resistance, he recommends that you look for a crossover, make sure everything is correct, and then back trading, take the trades. You want to take trades that are bad trades so you can learn from them. So take the trade, and more than likely, if you lose, it will be because you traded into or across, however you want to say, a resistance line or a support line if it's a short trade, or you traded right across to swing high or swing low. That Those are the primary things you have to do. So look for a crossover, put a mark right on your chart for horizontal, for support and resistance, a mark on your chart for swing high and swing low. Make sure if you're taking a long trade that 2 out of the 3 candles are white candles or whatever you're using for up candles. And if you're taking a short trade, that 2 out of 3 candles are black candles. And look closely at your target price. This we all learned. It took us a while to learn this, and we still review it all of the time in my group. But the target price should not fall into or have to go across support and resistance. It should be it shouldn't be way outside the zone of recent trade activity. And Dr. Fred would tell you probably that the target price is the first thing that he looks at. I have in my mind, and I'm just telling you guys my method. I'm sure you'll have a much better method than I am, but I can't talk about any other method that I use. But don't think it's the only method, because it isn't. But Dr. Fred says that target price is critically important. You don't want a target price from a candle with a large shadow on it, being it totally away from what the market is somewhat trading in that zone. So, and then you count the bars. Throughout Dr. Fred's course, there's been a little bit of information he talks about on generally the length of trends. And he says at some points that trends are usually 5 to 7 days, or that trends are 7 to 10 days. And then there is usually the market sits back, there's lateral movement, there may be a counter trend that looks like it might be going, but you have to pay strict attention to a trend, because something is going to happen, and each commodity is different. The trends on ZB and ZN, the bonds and the notes, have been very long. If you're trading corn, the trends tend to be very significantly shorter. I think the trends in the corn, I don't have my back testing open, but generally I won't take a trade after the 6th candle or so in a trend, because it ends quicker. And in corn, the counter trends are incredibly shorter. They're 4 candles. So you got to get used to looking at trends, which are as important as anything else. And those are the only really things that you need to do. Dr. Fred in the video that's in the back office, a couple of times in the video that he made with our group, said this boils down to 6 things. It boils down to looking at the target price, marking support and resistance, marking your swing high and swing lows, waiting for a crossover. Do you have 2 out of 3 bars that are the color of where you're placing your trade, and to count the trends? And that's all. Don't overthink it. That's how you want to do your back trading. And you will learn in the back trading some of the things that we have already identified. For instance, that the trends in corn are shorter than the trends in the bond market. Somehow, I think as a beginner, we all wanted to jump in and think we're gonna, be making $2,000 right off the bat. It doesn't happen like that at all. You don't even, if you're brand new, all you want to do is get in and back trade. Don't even think about what you can make or what you can lose. You want to look at it, identify a crossover, put your support and resistance marks in, your swing high, swing low, make sure everything's okay, and go for the trade. When you get your winning percentage up to 80–85%, it doesn't matter if you lose a trade. You're going to lose 15% of them. It doesn't matter. It's kind of, okay, you got a losing trade out of the way. the next trade will win. But when you get your winning percentage up, you don't even have to think about whether you're going to place a trade. You just go through your checklist and then make it happen. Now, if you're starting with a small amount of money in your account, be very, very careful. You're not going to be able to trade the bond market or the note market, because each point, my brain doesn't think in ticks, it thinks in points. So each point is $1,000. So in the bond market, it's not uncommon that, you know, a trade is going to make you $1,200. The risk, if you lose that trade, is probably going to be $1,600. I have never had a trade, and Alex and you guys jump into, I've never had a trade where the win is higher than what you're going to risk. You know, the 2% that Dr. Fred talks about is trying not to diminish your account less than 2% so you can stay in and learn how to trade. But $1,000 a point, you're probably not going to have the margin necessarily. You certainly can't trade multiple contracts. And so everybody usually starts with corn, and corn has been remarkably slow. I think even Dr. Fred's only taken 2 trades this year, but it doesn't matter because you're not ready to live trade. What you want to do is go and back trade. Corn is $50 a point. If you lose $250 and you win $100, or you win $600 and have the potential of losing $8, this is where you want to go and work that out, and then build your account up. I can tell you, one of the members of my group has only made, I wish I had that in front of me. I think a total of 7 trades this year. 2 were corn. If I'm wrong, guys, let me know. And I think 5 were bonds. And because he trades multiple contracts, 4 and 5 contracts, made 40 grand with 7 trades this year. That's what you want to shoot for, not the diddly, you know, $150 a point corn trade. You want to get so that you get your win ratio up to 85% and then trade multiple contracts. That's when you're going to start to see the flow come in.
I believe that's why.
Oh, go ahead.
That's why Dr. Fred said you start with corn, because you know the risk to loss ratio is much smaller. So when you build your account up past 10, say about 20,000, then you can trade. You know, you probably can start trading bonds after 10,000. But you know, you want to build your account up. If you mess with bonds, one trade can just wipe your whole account out.
Here's a question for you folks that are already live trading then. What type of accounts did you start with, base amounts? Because he recommends $5,000. I mean, you could go higher, I guess, and you could even maybe start lower.
Well, for instance, I started with 5,000, and I lost a few trades, but in December I had 0 losses. And going into January, I think I only had 1 loss so far, and it was my fault. I messed up. But I had a lot of learning curves, to tell you the truth, with the system, with my broker, stuff like that.
Sure.
So, but if you just take your time with the corn and trade, and you get the hang of it, then you move to bonds and you add that to your trading account. But I started with the 5. I came to Barbados for 3 months, and my broker said I couldn't trade from Barbados, which I can, so I had to switch brokers. So being so far away, I just funded my account with 3 grand just so I could just keep going. And we did Buddy and I think Karen and myself, we did a trade on corn. I think what we made I made like $970, so I traded 2 contracts. And the other night, I identified corn again, and we were like, okay, look, it looks good. I went to trade it, and it wouldn't let me. I couldn't understand why. So I called my broker. Well, they raised the margin for corn. So corn was normally like 16.78, something like that for margin. it went up to 2,000, so it won't let me trade, and I missed a good trade. I
Uh,
actually missed like 3 good trades on corn. Yeah. So if you have a small account, you might not be able to trade certain things at certain times. So I give the 5,000 is probably a good mark. If you could do a little more than 5,000, like Karen told me, it takes the pressure off of making a trade. The more you have in your account, you feel more comfortable. Okay, I identified everything. Everything looks good on my chart. Boom, you make the trade, and you don't worry about it. If you lose, you lose. But 80% of the time, you're going to win. And when I was doing the back testing, a light bulb went off. If you're doing 80% of the time and you lose 5 or 6 trades out of 20, you're still making 10,000, and that's with one contract. Now, if you add multiple contracts, that's 40, 50,000.
Mm.
And that's with corn.
So have you all started with corn then, or have some of you kind of veered off into bonds or different commodities?
Well, I'll say my learning lesson was I jumped into bonds and I lost. And that was ugly. So that taught me, okay, leave bonds alone. No matter how good it looked, I don't touch it. So I traded corn for a while, and also ZN. ZN is a good comparison to corn. To bonds. It's a little less money, but it followed bonds almost identical. It's usually like a little bit different, but not by much. So you can use the ZN and corn instead of the ZB, and you can make more money in the ZN. It has a lot more trading opportunity in ZN till you get up to that point where you can add bonds. So those the 2 commodities I use is 10-year and corn.
Okay, thank you.
And I think the rest of us, our group kind of decided very, very early on that we were just going to do what Dr. Fred was doing. And he trades corn and 30-year bonds. So we all jumped in and do corn and 30-year bonds. I did start also trading after a lot of back trading, soybean oil.
Okay.
It has its own rhythm, shall we say? But pretty much, this, I will tell you that I've back traded because I'm retired and have time now. I have back traded a number of commodities that he suggests. And this formula works on every single one of them. There are differences that you have to learn, but the formula works. So it doesn't really matter. For our group, we go back and forth and, check in with each other and ask what you're thinking about, where'd you put support today for bonds, and if we're all doing pretty much as Alex said, ZB or ZN and corn. So it makes a nice cohesiveness to the group, because now we're all we meet every 2 weeks with a Zoom call, but now we're all using the WhatsApp. So we talk to each other all the time. For sure. But there is one other way to do this, and it is one of the members of our group also said, I spent a ton of time learning this, and I'm not going to start out with making $50 on corn. If I believe in this formula, if I have my win rate up to 85, 90%, I'm going to throw a lot of money at this, and I'm just going to start trading. And he's done very, very well. But you have to obviously be in a financial position that's going to work for you too.
And it all depends on what your how much you're willing to risk, I guess.
Yeah.
So.
And when you build your confidence in this formula, it's like, holy cow, it never should have asked how much I was willing to risk. It works. It plain old works. And if you can get a win ratio of greater than 80% out of corn, go back, do back trading again, and pretend that you've got 5 contracts of corn. and work out how much money you're going to make. It is the formula works with all of these commodities if you follow it. Is there a learning curve? Holy shit, yes.
Mhm.
There is no doubt about it. And that's why your group is great. It helps. I wanted Dr. Fred to start an alumni group, and I kept pushing pressure on him before he even started one to get it going. Because, you know, frankly, as much as we all love him, some of the course content is just crazy.
Yeah.
Even as an experienced trader, I go back and look at it and say, what the hell is he talking about? And it just is what it is.
We all agree.
It's hard. But I think when you get good at back trading, you will say to yourself, oh my word, why didn't I find this 5 years ago? Is $300,000 a year obtainable? Absolutely. I think a member of our group is probably going to do it after only 2 years of active trading.
Wow.
So Karen, I have a question. I mean, this is very helpful. Can you tell us a little bit more about how your group functions? Because how I imagined the alumni group on Facebook would function is that after the bar for the day, the candle posts, everyone gets together and agrees, okay, 90%, this is a trade. But I'm sure there's still some variation in opinion on that. So can you give some insight into how your group functions with that sort of thing?
Yeah, that's really hard because as great as alumni groups are, you have to individually train yourself in this process.
Mhm.
It will never work out if you're looking at a group of 10 people saying, okay, should we take the trade or not take the trade? It just doesn't work. You have to develop the confidence and the skill to do it yourself. We are a group that really has gotten very close. We work together. If it's a really hard trade, yes, we'll get on WhatsApp and say, geez, what do you think of this? But nobody says, somebody might say, well, I think I'm going to jump in and try it. But none of us want the responsibility of saying to another one, this trade's going to be good, and then having it be a losing trade. That's a lot of responsibility to shoulder. You guys, to become traders, need to do it on your own. Can you bounce things off of the others in your group that you talk to? Absolutely. But I would caution you against that kind of an approach because it's doable. You can all do it. I'm a nurse. I'm retired. I'm old. I got COVID. It doesn't matter. You can do it.
Well, I agree with that. I really believe that, as much as we can come together as a group, that's why I really don't have an agenda, because at the end of the day, we all have to do our back testing. Nothing is going to take away from doing the back testing and learning the system. I know when I first started, my losses, I was having a hard time trying to understand what I did wrong. So it's definitely a learning process, but as you got to start doing it. I was a little hesitant to start because I was intimidated. But the more you do it, the more comfortable you get with it, the more you can see what you did wrong. But the only way that you're going to learn that is to do it. You've got to do it. And I mean, that's my take on it.
I'll give you one example, Karen, if you don't mind. I think back when we took that corn trade, I think I jumped in like, what do you think about corn tonight? Where's your support? Where's your resistance? Where's this? Where's that? We all go back and forth. Oh, well, I see it here. Like, okay, yeah, that's where I had it. So we're all in agreement. And then it's like, oh, well, I don't like this. But then Buddy jumped in. He said, well, wait a minute. Look, there's 2 out of 3 here. Well, Trade Navigator and Ninja Trade differs a lot. So what he had on his Ninja Trade was slightly different than what I had on my Trade Navigator. So everything else looked great, and he came and said, "Well, no, this is a black candle, or it was a white one of them. I think a white candle. It was white, black, white, and you take the trade of the color that you're going in that day. Okay, so to go long, it will have to be white. Even though the 2 out of 3, there's 2 white and 1 black. And so I was like, you know what? I'm gonna jump in, but I made the decision myself.
Right.
Now, I didn't say, well, okay, we all gonna jump in. It's like I made that decision on myself to go in based on what he had on his system. Even though mine was slightly different, I just had confidence. And I think we went 1 bar, we had 2 bars and we won. And that's when I won the 975. I was jumping up and down like say, hey.
Of course.
Yeah. And the same thing the other night, I jumped and was like, hey, look at corn, what it's doing. Like, oh, don't like these long bars. I'm like, well, everything checks out. We never decided on Facebook that what we're going to do. We just discuss what we see.
Right.
And where our lines match up. Are we all seeing the same thing? And it's like, okay. So then I make my own decision to take the trade. Obviously, it won't let me, which I was disappointed. But but that's how our group functions. Basically, we just bounce stuff off each other to make sure that we're on track and we see the same thing. Okay, I have resistance here. Yeah, I have it there. Swing lows here. Yep, that's where I have it too. Okay, yeah, I see the 2 out of 3. Yep, that's what I have. It's like all these check off, and then we'll give our reasons why we might not like it. Like, for instance, with corn again, it hit like 4 times in a row just in the last few days. And I would have never took the second or the third trades. I definitely would have took the one last night. But I think one member in our group did, and he won. But, we discussed like, okay, it's like in no man's land. It's like 7 bars out. It's a long trend. The bars are huge, but the price action was still good. But I wouldn't take it. So I would have probably got the 1 trade, but I would have never went for the second or the third trades. But you make your own decision, but we bounce things off each other.
That's good. Thank you.
That's great.
To make sure that we're on track and we're seeing identical. It's like, and then it helps too because they have Ninja and we have Trade Navigator. So like 1 bar, it was a doji, but it was white. My bar was black. It was like, so.
Gotcha.
So it helps. And then you still have to make that decision.
Sure.
And now you're going off for someone else's system.
So I believe a lot of us are having some trouble with, identifying the support and resistance, and you can correct me if I'm wrong, but it seems like, you can look at it from a macro view and then, micro and macro view. You can focus in on a specific area, but then you also want to look at the bigger picture to see where the support and resistance is. But you might want to elaborate on that, Karen.
Yeah, that's the biggest concept I think that is creates hurdles initially, is that you support and resistance is probably the most important thing to know, and it is confusing. I am prepared to, if you want, share my screen. Now, again, if you're using Trade Navigator, the screen's going to look different. I use NinjaTrader, but I can share the screen and kind of show you how I go through it, and we can look at corn for a few months and see if I'll identify, or Alex or Josh is on. Any one of my guys, jump in if you want to. And we'll just identify support and resistance, and then kind of look at it and see if it makes sense, to trade that. Would that
That'd
be
be
valuable?
great. That'd be great.
Perfect. Yes.
Karen, can I say one thing before you go? Because I have to log off in a second.
Hey, Julie.
Hi. Because in our group, I'm the one who is the most ridiculous about support and resistance. I can't, right? And so in our last meeting, I just need to learn it better. So in our last meeting, we were given the assignment, and our group is currently doing this assignment where you go back and back test for a year, every single crossover. And then you will have pretty high lose rate. And then you go back through and you put in what you might think of as support line and resistance line. And you see if that takes out any of, you go back and look at your losing trades and take out anything that hit what you thought is a support and resistance line and see where you are then. And then you go back and look at the losing trades that are left and see if you can identify a different support and resistance or a different reason why those were losing trades, so that you're trying to go from, instead of how do I win more, how do I make my, what parameter do I put in that makes my losses less than they were before when I just did straight crossovers.
Thank you on
It's
that.
making an enormous difference for me. And I've back tested already. I went back and retested this same way. And, suddenly, I'm eking out 80%, but I went back and did it that way without any preconceived notions. And I got back up to 85, 90. So I know that even if you've done it before, it will be good to do it again.
Perfect. Thank you.
Well
Good
said.
job,
Julie.
everyone. See you
Well,
soon.
Good.
See you,
All
Julie.
right.
Thank you.
Hey, Julie.
Thank you.
See you.
Hey, can I ask real quick, has anybody had any other trading education besides Dr. Fred's course?
No.
I have. This is my fourth E-mini course.
Okay.
The others were really hard. I had one was live trading early in the morning.
Yeah.
And even Dr. Fred said to me, "Oh, that's scary. I wouldn't do that."
I day traded for a couple of years and had some courses, and let me tell you that they are not really that advantageous in this. In fact, they are a hindrance, because some of the things that we would do as technical traders in a day trading capacity, it just doesn't translate over here quite the same way. Even you'll see that, those of you that had some other trading about how support and resistance looks, it's different. It's a little bit different here. So and I highly encourage you to try to forget a lot of that stuff if you had some of
Yeah,
it.
he was concerned about that with me. He said, "I'm afraid you might, be
Yeah.
thinking of the old courses." I said, "Well, it's been about 5 years now, so I really don't think I remember much."
Yeah, it was a challenge for me because I went right from day trading every morning for 2.5 hours right into this. And I had to just essentially forget all that world and move away from it. And today I moved money from my day trade account over here because it's so much better to me. So anyway, I'm sorry, Karen, I just wanted to see.
No, I'm glad
Nah.
you brought that up, buddy, for sure, because that,
Mhm.
you have to unlearn. Whereas if you know
Mhm.
nothing about it, I think it's easier.
Mhm.
But that is a struggle. If you've done this before, if you've been a day trader, if you've used another, don't try to draw parallel lines. They're not here. For
I have a
sure.
question.
Hey, Karen, it's Josh.
Hi, Josh.
Hey, I just wanted to emphasize one thing that Julie said is she just articulated better than I was thinking, but the idea shouldn't be how do I win more? The idea should be how do I lose less? And that's the whole purpose of back trading. Is it's not how do you make more successful trades, it's how do you keep yourself out of bad ones.
Boy, that-
Exactly.
Exactly, Josh. Thank you so much, because that I totally overlooked that. That's the whole point of back trading, guys, to keep you out of as many bad trades as possible. Thanks, Josh. That's key to this whole process.
And Karen, I was gonna say that's key to the whole course. Dr. Fred will even tell you the course is designed not to get you into good trades, it's to keep you out of as many bad trades as possible.
That's
And I think
yeah.
Helen, you got Keith pretty good a couple of days back when he was talking about bonds, and he was looking at the pattern. He was like, I know for sure this is going up the next day. I'm looking at the pattern, and you jumped in and you told him. It was like, yeah, but Keith, in your own words, you want to stay out of as many bad trades as you can, right?
Right.
Aren't you supposed to be following the system? And he's like, okay, you're taking the words out of my mouth. And
All right.
I haven't,
Yeah.
and that trade hasn't gone up past where he thought it was going yet. It's still down right now. It's going sideways.
Yeah.
That's an example of learning something, and trying to forget it to apply this system, perhaps. I don't know. That's what my impression was. But
Well, it seems
Yeah.
like it's less time consuming too. I mean, if you're talking about day trade, you're on the computer like hours, right?
Well, yeah, and some of us have let that creep into this. We're obsessed with watching the price action on a shorter time frame.
Guilty.
Yeah, me too. And I am trying to pledge just to fire and forget, walk away, come back, check it the next day.
And we did have another member. It was kind of funny because he said you go through this back testing and you can do like a year in, several hours or whatnot. And then he said, then he was started to do forward testing and he was getting bored because, you have to wait. You have to
Yeah.
wait till the next day, so,
Yeah.
so it was kind of humorous, but no, I get it. And that's okay. I'd rather be bored than, losing a lot of money. So.
Yeah, and when you get good at back testing, we can all do a year and it doesn't take more than an hour. What you guys want is 2 to 4 trades a month. That's it. This is all this program's going to give you. It's not going to give you, if you get 30 trades a year, that's a strong amount of trades. So don't go in and use the KISS principle. Keep it simple. Stupid. I'm referring to me, not you guys. But 2 to 4 trades a year is going to make you a ton of money with multiple contracts when you get your win ratio up to 90%. I mean, who cares if you lose, if you're losing 10% of the time and you're going to walk away with a net profit of $80,000 on bonds or notes. So look for those trades that totally meet the formula and only that. I think that's well said because when you're forward trading, you have to wait 24 hours for each and every trade. And that's as painful as, Dr. Fred making us wait however it was before the next module is available.
Right.
But it is absolutely correct to say that you need patience to do this. You can't rush it. The market is the market. You can't, there is no way you can tell what the market's going to do. And you just follow the formula. That's all you have to do. For members in our group that are active traders, it literally with 2 commodities maybe takes 3 minutes a night. And that's if you're going to place a trade. But that will only come with experience. But this is literally the easiest way, I believe, to trade is using this program. End of day, does it meet the criteria? If it does, you place a quick trade, you walk away and you look at it tomorrow night.
So here's
Mr. Reynolds, if I may ask, Julie had mentioned something about her group. They did an assignment with support and resistance.
Yes.
What did that consist of?
Well, one of the members of our group is now teaching. I'm sorry, I didn't realize there were some folks that hadn't joined this yet. But one of the members of our group is now teaching his wife, 2 daughters, a brother-in-law and a sister-in-law or something, how to trade. They never went through the syllabus. They wouldn't know a candle from anything. And all he's having them do is look for a crossover, see if all of the parameters match that we've talked about, the ADX, the positive DI, the negative DI, and do the trade. Don't even think about support and resistance. Then you're going to have lots and lots of losses. Then go back to the same trades and put your support and resistance lines in so that you will see that most of the trades that didn't make it are because you traded into support and resistance or swing high and swing low. So it's an exercise we've all kind of been doing. And I will tell you, those of us that have been profitable trading, we still back trade every single week. If you don't back trade and there's no available trades for 2, 3, 4 weeks, in my head, I'm going to lose it. I go back and back trade all of the time so that I know the nuances of the commodity that I'm in. I know that the trades are shorter. I know not to take candles with big shadows on them. You know, you've got to learn that from your back trading.
And I was just gonna ask that question. So I'm so glad you said that you're continuing to back test even while you're live trading. So that's
All the time.
perfect. The other question I have for you guys is, are you funding or your profits, are you putting them into your LLC? I'm assuming you've all created an LLC?
Yeah.
You know, I
Yeah.
have a
I think-
subchapter S, but
Yeah.
I'd be an escort. Yeah.
Yeah,
Yeah.
we all pretty much have businesses set up, or I
Okay.
know that one of us, I think Darren is just getting his set up, but yeah, we've pretty much followed for tax purposes, set up the business and run everything through the business. Now, when you guys go to get a funded account and work with brokers, you're going to jump through hoops. You've got to provide all sorts of support data to support that you have a viable, recognized, federally and state recognized business. So just be prepared for that hurdle too. I thought
Another-
it was a pain in the neck, but
Another question, now you had mentioned to me that with Ninja Trader, you don't have to have a broker, but with Trade Navigator, you do.
yeah, I chose Ninja Trader when Dr. Fred was supporting the use of both of those software programs. Trade Navigator because he used it for 20 years, and Ninja Trader because it's in my opinion easier to use, less problematic, and you can trade free with Ninja with live data until you want to finally fund account and go live. Ninja Trader at the beginning of this year, I think took their brokers, and it's all in-house. So you go through the process just with Ninja Trader. I have stuck with them. The candles may be different. The data may be different. We go through that all the time. Buddy and I are Ninja people, but the outcome is the same. The formula works despite what the software program is.
I'm interested in seeing the way you draw your support and resistance, Karen. Do you
Okay.
do that on the weekly chart as well as the daily chart, or do you just do it with the daily chart?
No, Dr. Fred's a big one of also saying, you know, well, let me back up just a minute. Excellent question. And I use my background as medicine. Medicine is a huge puzzle, and you can never figure out anything without all of the puzzle pieces being put together. Medicine differs from surgery. You got a broken bone, you go in, you fix it. Medicine is entirely different. All of the indicators that we use are puzzle pieces, and they've got to fit in appropriately to keep you out of trades that are bad. So he does definitely teaches to go and look at the weekly and make sure that the trend is the same. The last time I talked to Dr. Fred or emailed with him, happened to be because one of the members of my group and I were chatting and saying, you know, I went back and did some back testing and really looked hard at the weekly as opposed to the daily data. And the weekly data lines up perfectly. Like if you're going, the DMs are the same. They're either the negative higher than the positive or the positive higher than the other. The ADX needs to be above 22. You know, the weekly data should mimic the appropriateness of the daily data too. But don't get overly involved in that initially. I think if you go into weekly and just make sure that that the week has been a down week, if you're going to place a down trade, Mondays are the bummer of the day because there is no data there except for what's happening on Monday. Trades on Wednesday and Thursday are easier to follow because you at least have weekly data. But when you look at the weekly data, don't focus just on that 1 week. Look back. What have the trends been? Has it been a strong uptrend for the last 3 weeks, 4 weeks? It is a part of the puzzle to look at, and he does recommend it.
Thank you.
should I share my screen?
Sure.
Yes, please.
Yes.
All right, I think if it's okay, I think I'll just, let me get set up here. I'm gonna just look at corn because I assume most of you are, or a lot of you are gonna do corn. And I will go back to just the beginning of the year and show you how I set it up. Now, my group, jump in anytime you want. And I'm sure you'll all get better at this than I at some point. So you'll all develop your own process, but I'll just show you how I do it. And let me know when you can see it.
We can
There
see.
it is. Yep.
All right, so here's the data box right here. Again, this is NinjaTrader, so the whole screen's going to look different, but don't worry about it. A candle is a candle, a white candle, a black candle. The first thing I do, I did mark this. So this large white candle, and stop me if you can't see because it's on the end of the screen because I want to hide what's behind it.
Mm-hmm.
This large white candle is January 4th, I guess. Yeah, January 4th of 2022. So if you're going to back trade ZC corn, go all the way back on your chart. And this is what you'll see it will come up with. Now, what I have on here, these gold dots, this is simply an indicator that marks swing highs and swing lows. Way back, I may not pick up the swing highs, but I do use that indicator and I've just left it on it. What I do first is I will go into my drawing tools and I'll grab just a horizontal line. I'll grab two horizontal lines, throw one right there and throw one right here. And I will go in and mark off where my support and resistance is. Resistance is the ceiling. It is not a defined point. It is a zone. You're not going to always get two candles that line up perfectly with opening and closings. It's a zone to be aware of. So here is the candle I'm looking at. I'm starting at the first of the year. This is ZC, and my resistance is right there. Nothing has gone over that line, actually, for as far back as you can see, but it clearly, there's the high that the market has been. Then I will take my horizontal line and I will slide it up to where support is. And support is right around here. And the line is right there. So you can see that support was tested with this black bar, but it held. The shadow does look like it penetrated it. But this is pretty much where the closest support line is. Now, I'm going to stop because I'm going to read you an email long ago from Dr. Fred, because this support and resistance, the question is, how far back do you look? How close do you look? The whole bit. So his email to me, I'm just going to read you one sentence. When looking at your daily chart, the one that you trade from, look back to at least 2 or 3 areas of support and resistance. And I'll show you how that is done. But support and resistance with a market that goes laterally, you could be going back a couple of months to establish that line. So right now, here's our closest. And if I were evaluating this right here, the next thing that I told you, and we do have a checklist, by the way, but I'm going to wing it a little bit here. Number one, I don't have a trade because 2 of the last 3 candles are white. But what I clearly have is a crossover. Can you see in the data box that the EMA 3, which is the blue, has crossed over the EMA 6. So the EMA 3 is higher. In my data box, it's 542.75. And my EMA 6 is 541.75.
I don't see your data box. Do you have your data box open?
Oh, I do. Let me move it closer.
Yeah, we don't see it on the screen at the moment.
Can you see it now?
No.
No.
Can anybody else
No.
see it?
No.
Really?
I mean, you can see the crossover though.
Well, you can
Okay.
see the crossover.
Well,
It's not a hard one.
isn't that interesting that it's not there?
It's like
Well,
a
it might
second
be-
screen. So
Yeah, it
Yeah,
might
I
be-
think it must be a second
Yeah.
screen thing.
Okay,
Okay, well, it'll be, you can correlate everything with your data box. So
Okay.
you can see this bar that the blue line has crossed the red line.
right.
And if you look down here at the bottom of the chart, as Dr. Fred has it set up, you can see that the blue line has now crossed the red line. That's
Right.
2 areas of confirmation you have that this is a crossover. So needs to be evaluated to see if it can be a trade. So you've got your support in, you've got your resistance in. Your swing high, low is way down here, the closest one. So that's not an issue. And your swing high, you can't even see, but it very likely, swing highs are denoted by not the candle of the body, but the shadow
wick.
of the body, the wick.
Yeah.
The wick.
Okay. Support and resistance are defined by the body of the candle, not the shadow or the wick, whatever you guys call it. So we've this up here will be a swing high until it's broken, but this is resistance and we have this marked as support. We have a crossover. So a lot of things look good, but we don't have 2 out of 3 candles that are white if we were to place a trade. So you simply walk away, you come back the next day. Let's look. Okay, that's a black candle. Good thing you didn't place enough trade. You would not have won. You still don't have 2 out of 3. That is the 5th. It still is the same resistance and support, swing high and swing low. So keep going. Just keep going. Here's a white candle. And I will tell you one thing that I have learned. Candles that make the best trades are candles without much of a shadow. The longer the shadow will increase, as you have to put your sell stops and your buy targets outside of that shadow. So it always increases the risks. And although, and in the video in the back room, back office, you will hear me ask him what candle shapes he follows, and he tells me none. However, the candles that we all pay attention to, and you will learn this in your back trading, are certainly the doji, the spinning top, and a candle with a long wick. Pay attention to it when you're back trading. I have found not only does it increase the risk, but the trades are not as consistent as the winning trades with candles with long wicks. From my own experience, you might have a different experience, but we all kind of are hesitant with candles with big wicks. So let's go to the next day. Okay, it's still the same. I'm sorry, support and resistance. Let's look at something else, and you're not going to be able to see this because you can't see my data box, but this next trade looks a little better, but the ADX is 19.75. When you begin this back trading, you want your ADX greater than 22. So that would knock you out of that trade. So that's not a viable day. Does anyone know how to get the data box to show in?
Karen, I'm thinking if you go to share screen that you have the opportunity to share your entire screen or just share a specific window, and you may be just sharing the one window.
Oh, thanks, buddy. Let me
In reference to the ADX, I
Yes.
noticed that sometimes in my back trading, where I've started to notice, patterns as I've done it more, that sometimes I feel like that ADX lags behind. Do you guys, as you've gotten more experience, I know when you're starting out, you're supposed to stay with this criteria, but do you find that you make trades when it's maybe at 19 or?
Yes,
I tell you, I do. I wasn't gonna say that. I'll let you experience that for yourself, but a
Yeah,
lot of times I don't even pay attention to the ADX.
Okay.
But if everything else line up and the ADX is the only thing off, then I'll risk the trade. But again, you have to do your own back testing and see, you actually saw it yourself. So
I just wanted to, we've talked about that some in our group and in the alumni group, and seems like a lot of people have the same consensus that it lags behind.
There it is.
Yeah, that works.
Data box.
okay, great.
Perfect.
After you get good at this, after get your winning ratio up and not before, go with the 22.
Okay.
But as you get good with this and you gain your confidence in the formula, you will find that that is the one variable that live traders probably take. Buddy is absolutely right. Alex is right. That is pretty much my only one that I will vary from, though. I will tell you that.
Okay. Good to
All right,
know.
I'm glad
Thank
you
you.
can see the screen. So, okay, or the data box.
It seems like Dr. Fred does the same thing because some of his latest bond trades, I don't think they were 22s or above.
No, he'll go to 13.
Oh, don't tell us that. Don't tell us that.
That's why don't look at his trades, guys. You won't be able to replicate them.
yeah,
He can do that because he knows how to trade this commodity. He's been doing it for 20 years.
Yeah, because the one trade he took on the 131 trade, there's no way there was a cross. The red was above the blue all day long. But he took it and he won. And then he took a second trade the next day and won. I would have took the second day, but I would never have took the 113 trade.
Yeah,
and that's what his response was. This is not for the newbies. This is for my people like myself who've been trading 20 years. Don't do it.
Don't do it.
And yeah.
Yeah. Okay, so we're at January 7th, and it doesn't meet the criteria. Our ADX is not right. If this is a long trade, look in the data box at the very end of it. You want the positive DI to be higher than the negative DI. So that's not going to work out for us.
Right.
And here's another down day. So that rules that out to even take a down trade because we wouldn't have 2 out of 3. Let me just scan to where.
With the 2 out
go.
of 3, is it candles 2 and 3, or could it be candle 1 and 3, or it has to be the most recent 2?
Okay, so the day that you're going to take a trade, the candle has to be in the direction you're going to take the trade. So my cursor is on a white candle. If I were going to take a trade that day, you would want 2 out of 3 white candles.
Right, but here you have, for example, 2 out of 3 black candles.
So that rules it out.
Right.
But now, Karen, I was gonna say, now you could go like if you see the one black candle, then the white candle, then the black candle.
Yep.
The black candle is going in your direction, so that's 2 out of 3, even though there's a white candle in the middle.
That's
so I mean
correct.
that could be a trade,
Right.
But the candle has to be the one that's going in your direction, the one that you're going to take the trade on.
Right.
So it would have to be black, even though the one in the middle is white and the next one, the one before that is black. The one that you're taking it on is black, so you're going down. You're taking you're selling.
Short trade. Yep.
Short trade.
So I just went while we were yakking to January 21, because we have finally crossed. Again, here's our support. Our resistance, I'm sorry. And here's our swing high denoted by the green dots. And this candle has gone higher than resistance line and higher than the swing high. So let's look at this candle and see if it would make a trade. The ADX is 24. This would be, we've got 2 out of 3. We've got 3 candles that are white. Our support, where are those 5 things I told you about? And we'll talk about widening EMAs because it's also critically important, but don't let me say about that.
I like Karen, you can actually go back because the 2 candles before that would have probably been a good trade. Because you got the crossover, you got 2 or 3 out of the that's going in your direction.
Yeah, except for except for Alex.
It doesn't trade in
If
into
you're looking at
resistance.
here, I would have had to have crossed my resistance line. Here is my target price way up here.
Your screen is different than mine. So
Yeah, sorry.
Yeah.
So this doesn't make a trade because this wick did not cross my resistance line, and here is my swing high. And there is my target price with that purple dot. So that's not a good trade. That's not a good trade. This might be a good trade. So let's evaluate it. Number 1, it penetrated the resistance and it penetrated the swing high. So let's take a closer look at it. You can never, this is another thing that Dr. Fred just blew me out of the water with. I don't know if this is going to continue to be an uptrend. It has 5 white candles, but there's nothing. Dr. Fred says that any trader will tell you that a trend is a trend when it becomes 7 candles or 3 candles or 2 candles. You don't know if it's going to be a trend, but right now it looks like there's 5 candles. 1, 2, 3, 4, 5. Keep in mind, trends generally only last up to a max of 10 bars. So we're good with the trends. Our crossover is down here, but none of these met the criteria yet. This one now does. The ADX is good. The positive DI is 22. The negative is 12.5. The EMA 3 and 6, the EMA 3 is higher. You can see that there nicely and down here. So I would take a trade. I'll probably screw this up and it probably won't win because I'm not looking in advance, but this is absolutely an appropriate setup. Again, you're not going to win all trades, but let's see what happens.
Bingo.
All right, well, it's another up bar.
Mhm.
It did not hit my target price yet. It takes up, I let things go at least 5 days. He'll tell you to go out 4 days. And Dr. Fred will also tell you if you get 2 bars going the opposite direction, close out and take your loss. But I'm happy. It's still an up bar. And all I'd want is the market to go up to hit my target price, which if you look at the data box, my buy target price was 565.50. So let's let it sit. The trade's still open. I don't care that that's a black bar. Look where it is. It went right through my target price. That's a win. You don't really care if the bar is black or white. All you want is it to penetrate and go higher than your target price. Now, looking at this, you know immediately there can't be another trade because this is a black bar. And you're already 1, 2, 3, 4, 5, 6 bars into the trend. So you wait, you walk away, you're happy, you got a winning one. Let's keep going.
Karen, what sort of win would that have been? I've been practicing with bonds, so I have no idea what the corn wins would be. What was the risk there, and what was won? If it's not going to slow you down too much.
Yep, not a problem. Let's go back to it. You would place a trade on
right there.
That bar right there. So
Mhm.
it closed at 557. I write this down. I do it manually. I know that's weird, but I would write down 557.75. That is the close price in the data box. And that is the price I'm going to try to enter the market with a long trade. Now my target, my buy target is 565.50. So 565.50 minus 565.50 minus 557.75 is 7.75. And I only deal in points. Each point in the corn market is $50. So 7.75 times $50 is a profit of $387.50 with one contract. Multiply that with 4 and you got a nice $1,200 win.
Do you have the price tool on
I
Trade
don't.
Navigation?
Yeah. Do you have it, buddy?
No, I don't. I have been looking for it for the last couple of days to see if there is a good one.
Yeah,
And
I can't find
Yeah,
one.
so we have the price tool. We just draw the line and it just automatically tell you what the profit is.
Yeah, Trade Navigator has this inherent in there.
Because Dr. Fred yelled at me because I started counting points and trying to do it like you did. He's like, look on the side of your screen, grab the price tool, draw it out. I'm like, okay, that works.
It might be under your drawing tool too, Karen.
Yeah, well, I've searched all over the place and
Yeah.
I can't find it. So
I
I think if we follow through and look what the risk would be to see what the loss would be, that might be helpful too. So this is the candle. We already know that if we win, it'll be about $387 if it's a one contract. Now to do the risk, if this, you still go in at the, you're at 557, I'm writing this down, 557.75. And if it goes bad, your sell stop is 545 even. So that's a difference of 12.75 points times 50 is for a $387 win. You're risking losing $637.50.
Got it. Thank you.
And that's kind of common.
yeah,
And when you get good at this, you won't really care too much about what the risk is. If you know it meets all of the parameters, you'll just go forward.
Okay, thank you.
So let's just see if we can get another one, knowing that this now is a trend, that something's going to happen in a minimum of 10 bars or whenever the trend ends.
So you stop it there.
So
So you're about 8 bars into the trend. Didn't you say something like you wouldn't enter in after the 6th bar?
in corn, 6 or 7 bars into the trend is what I go. Now, when you're counting trends, this is an easy one. It's all white candles. So it's 1, 2, 3. Technically, you count the up candles. 1, 2, 3, 4, 5, 6, 7. You're already 8 bars into the trend here, 9 bars into the trend. Until you know each commodity, your commodities you're trading, how long they normally act. And one of the biggest tricks to know that isn't talked about too much is if you don't have a crossover to guide you, look at the EMA 3 and the EMA 6 lines. If those are widening, that tends to indicate that the market is going to change direction. And that is, they're nice and tight right here, but they are also widening, which tells us that that uptrend may very well have a lateral adjustment or turn into a downtrend. So always be conscious of widening EMA 3 and 6 lines when you're doing this. So, and there's a trend change right there.
Yep.
So you know, what I didn't do in evaluating these, because I wasn't going to go on anymore, is always fix your support and resistance lines. So this clearly starts more than likely a new resistance area, and our support is still down here. So this bar has changed. Get that over a little bit. So there's no trade this day. That's looks like resistance held. It certainly was tested, but it held on, where am I, 2-1. So that's not going to work. Here's now 2 out of 3 black bars. Is this going to be the change and a downtrend? Possibly, but we can't take a down trade because there's no crossover yet. The red line did not cross over the blue line. And you can always look in your data box and manually check it there, because sometimes you can't see on a candle. It's so darn close. But if you look in the data box, you can clearly see if you are going to take a down trade, you want your EMA 6 to be higher than your EMA 3. And in the data box, it isn't. It's 567.75. And the higher one is 568. So that's not a trade. So there, let's look at this one. This is a crossover. Needs to be evaluated. Again, you'll see that these long wicks should give you a feeling that Dr. Fred talks about in his class that says, if you get a gut feeling not to do it, just walk away. There'll be plenty of trades. That long wick is somewhat concerning for me, but what's more so is look in the data box. The negative DI is still less than the positive DI. That rules out a trade.
And the price action is really far.
And the price
So
action,
harder to hit that target. It's a long distance.
Thank you so much, Alex. Here's the price. Here's where you want to get my price target. And it's way far away from what's been happening here. That's because this wick is so darn long. So that's I'm not taking that. And here we go with a white bar again. And a white bar again. There is a crossover, but look, our resistance held again. That's no trade.
And a big gap open.
Oh, and a gap open. Excellent.
I
forgot to say this. See this day and this big area. This is called a gap open. Be very, very aware of gap days. Generally, you will find with your back trading that you don't want a trade if it has been a gap candle. So we are on, where are we on? The 8th. This is a black candle again, so there's no way. And look at our resistance held. Let's go to the 9th. Okay, so oops, I didn't want us to do that, but let's look at this. It broke through resistance. It broke through support, swing high, which is, looks like it's this wick right there. Our crossover, the blue is over the red. Look in the data box. The ADX is 33. Positive DI is 29. The negative is 9. This is an uptrend. There's a lateral trend, a tiny downtrend, but this is back into the uptrend. That's a yes for all the criteria.
Small wick.
Small wick, love the small wicks. The other thing I like is look down here. ADX is going up. The two of the criteria he also says to use is that if you're going for a up trade, a long trade, your positive DI should be going up, your negative should be going down. This is going up, this is going down. This meets all the criteria. And whoa, did it win? I don't care that it's a black candle. Here is my target price, and it went way over, that's a win.
Mhm.
Mhm.
I've got to adjust my screen here. Do you want to do one more? Keep looking?
Well, that's, that's a no.
No, this is a big no for sure. But what we can do is we can adjust our resistance and adjust our support, because we now have this zone down here that has, none of these days have gone less than this zone right here. So we've adjusted our support and resistance. This clearly is going to be the starts of a swing high, and a swing low is already in here. So let's look at the next day. It is a white bar, however, has a long wick. Your
price.
Your target price is way out here.
Plus DI is coming down.
Say again?
The plus DI is coming down.
Yep. You know, as a beginning trader, I wouldn't have taken, I don't think I would take this anyways. Would you, Alex, buddy?
No.
No.
I'm out on that.
Yeah, I wouldn't take that.
Okay, here's this candle, and now we have the opposite, and we've got a long trend here. But look at, this is now the swing high. These green buttons established right here. If I were to take this trade, I would have to cross over the swing high. That immediately rules it out. And good thing, because look at that bar. That's a lovely honey. That's a black bar. Forget it. Let's look at the next one. These are kind of the bars I like to see. It's a white bar. Look how nice and narrow the EMA 3 and the EMA 6 are. Our crossover is down here, but we are 1, 2, 3, 4, 5 candles into a trend. The EMAs have gotten way closer. Our target price is right here, and we already know it's been up here before, so it's a much lower target price. Does anybody see anything wrong with taking a trade right there?
You gonna adjust the support? You gonna adjust the resistance line, or?
Yep.
No, the resistance line.
Oh, sure. Yep. Here's my good, I could adjust both of them, because here is a new support line, and here's my new resistance line. So here's my target price, and I don't have to cross over the new resistance line to place the trade. Thank you. Thank you, Alex.
So, but Karen, there's no 2 out of 3 candles there, and that's still, we can take that
It's
trade,
still
even though there's no.
We've got 2
2 out of
out of
3
3.
white.
We got 2 white. We got a black one in the middle, but it doesn't matter.
Right.
Doesn't matter. All we want is 2 out of 3.
And the white is going in your direction that you would go.
And the white's
You
going
wouldn't-
there.
Right, you wouldn't go short. So if you're thinking about going long, then your white, the candle that you're going to use as your setup is white. So you have 2 out of 3. The candle using is white.
But the
You're
plus DMI,
not.
what about the plus DMI? It's decreasing.
The positive, it does, because this is such a higher candle. So you're right. The positive is still much more than the negative. But what I have found in back testings, when you get a big candle, like, you know, some white candles up here, and then a big black candle, if you get a white candle that's much smaller with your target price only here, more chances than not you're going to win. Now, I'll probably be totally wrong on this one, but let's see. Okay, it's a white bar. It's the EMAs are nice, but here's my target price. Let's go another day.
Got it.
Yeah,
That's a
DI plus DI was going up.
Yep,
Yeah, the
that's a win.
DMI shifted. It shifted going back up. So it worked, I guess.
Yep, that's a win right there. Are you guys kind of getting the gist of it?
Good job.
Yeah. The support and resistance is really important.
So I Yep,
Mhm.
adjust the support and resistance, you know, and it makes it easier. Look at this narrow channel that you now have to evaluate. You don't
Mhm.
have to do anything until it breaks through that channel. It kind of makes trading easier. But if you don't identify support and resistance, you're going to get percentages in the 40%. It is critically important to a trade.
And then
And
Karen,
it
even
wasn't,
though that, real quick, even though that's your new support,
Yep.
if the candle do come down and break through, then you want to look for your next level of support coming
Correct.
down, just to make sure you're not trading into it.
Excellent.
So you would look for where, like back down here.
Yeah,
Yeah.
absolutely.
So then you use that as your next evaluation. Is like, okay, where's my next support going down now?
Right.
If that candle turns and starts to go down a downtrend and it crosses your support, then you look for where your next support would be.
Right.
And
You
make
would
sure you're
adjust
not
it down.
trading.
That's
Right.
excellent. Support and resistance need to be adjusted with almost every single candle. So if it's gone through one level of support, if you were taking trade on that black bar, then you'd see where the next level of support is. And if you had to trade across it, you would not trade. So it
Right.
is a ever-moving dynamic bar. And that's how important it is.
Mm.
Should we do one more?
One more.
Yes, let's do it.
All right, so this, we won on, we won on that one, right? Okay,
Mhm,
so
yeah.
let's look at the next one.
Oh,
Oh,
Gap
I
open.
will tell you, beginning traders it should stay away from great big bars, because look at your price action all the way out here. Until you get comfortable knowing that it's going to work, look for, this is like the perfect bar you want to look for. It's got a little bit of wicks on them, but not a lot. But look how big this is. Number one, the price target's way up here. And number two, your stop loss is way down here. So it just makes it a high. You're going to lose more if you lose the trade. And I would tell you to begin with, just kind of, there's going to be a trade all of the time. How many trades have we done yet? I think we just took 4 trades that worked since January 1.
so here's a quick question. So on that third white bar going up,
Mhm.
we went on that. Can you not go back in and trade on that same bar going for the next day?
You could.
We went in on, where did we go in? We went in on this one.
Right,
We didn't win there, and we won there.
right.
You could.
Okay,
However, if you look at this candle,
uh-huh,
it crossed resistance, but my price target, I would have to cross the swing high. So it rules it out for that day.
gotcha, okay.
If it didn't rule it out for that day, you can turn around and take an immediate trade. But I would tell you, when you're first back trading, is to start with the crossovers.
Gotcha.
Immediate trades are going to take longer to fill. Usually they'll take a couple days longer. And this one you could not do because my price target's here and I would have to trade across that.
Gotcha.
Does that make sense?
Yes.
Okay, I need to
also
adjust.
said in the course somewhere that the day you win, the bar you win on, can't be the setup bar for the next day, Jim.
And I think I read that somewhere. That's why I
Yeah.
was asking.
And
Yeah. The only thing, like Karen, I don't want to like contradict you a little bit, but when they have the big bars like this one, the last one, but see how the wick isn't that long?
Right.
So the price action is still pretty close if it meets all the other criteria.
Correct.
Yeah, so I would trade on those, but a lot of times when, like, if you look back at that, what, 1, 2, 3, 4, 5, 6, like 7, see how long that wick is?
Yeah.
And see how far you have to go to hit the target?
Yeah.
That's a stretch.
Right.
But like, if you look at corn over the last couple of days, the candles have been huge, but the targets have been close. You know, so
excellent
It was
point.
still scary, but
Yeah.
Yep,
like,
absolutely excellent point. And if this were the bond notes, you would probably have a chance of making with a single contract, maybe $1,400. I'm just guessing.
mhm,
And your risk would be, you know,
a
it's
lot.
large handle, so all the way down here. So your risk would be somewhere around $2,900.
Yeah.
So when you
But-
get good, Alex is absolutely right. A more experienced trader, which none of us are experts by the way, or we wouldn't be here, but an experienced trader would, as Alex said, he would look at this bar and there absolutely.
Yeah.
Um,
The only thing
I-
now is trading into no man's land, so that would scare me
Right.
a little bit. Now, if I had a lot of money in my account, I might take it.
So
if everything else met the criteria.
now this is corn at $50 a point. The only thing I see that may be making me a little nervous is a little bit of a widening EMA, but this is a big, strong bar. The ADX is up, the blue is up, the red is down.
I
ADX
think you're
is-
talking me into taking it. I think I'll take it.
I would take this bar. I
Yeah.
would take this bar too. Now, don't forget though, how far are we away from the crossover?
Yeah, a
That's
lot
what
of
I've been
bars.
thinking. That's what's been confusing me a little bit is we're getting really far from that crossover.
Yeah.
Already
Yes.
10.
Yeah, we're 10. So, you know, that also adds a degree of risk. Now, we did have a little bit of adjustment to the market. If it had been just 10 bars going up, don't take it. But there was a little bit of adjustment with these dark bars, with these black bars. But our crossover, frankly, is way down here. So even that 1, 2, 3, 4, 5, 6, 7, 8, if you counted all of them, there's 8 in a trend.
And it's going in, there's nothing to, you have to go way back to find the support and resistance. I mean, swing high or swing low. I mean, or swing high
Yeah,
or a resistant line.
absolutely. We can adjust our support line. We're still right there, but this is what we call no
man's land.
But I don't see anything that is saying, and I'm going to trust the formula is going to work. It will work. 85%. I have a rate of 86 or 87% win rate on corn. So I would take this trade. I also like it because it's my oldest son's birthday, 2/22. Not that I'm superstitious.
Put that on your filter sheet. Yeah, if it's somebody's birthday, take it.
Now I close my eyes. Yep, there it goes.
Got it.
You got it.
Got
Hey, thank
Got
you.
Thanks for talking me into that because I was going to say, but I'm in. Yeah.
Yeah.
Again, see,
Alex
I
is
like
big.
Buddy when
Yeah,
I like when
Buddy.
Buddy jump in. He talks me into a whole bunch of stuff.
But I want you to know, look at how widening this is. The EMA 3s and 6 are widenings. Look down here, see how the positive DI instead of bolt upright is turning a little bit. This to me is the strongest indicator that this trend may change.
Mhm.
You know,
And you just basically took 2 bites out of it too. So like, you know,
and you took 2 bites. Be happy with the 2 bites.
yeah, don't get greedy.
Multiple contracts, that's all you need. Let's
Yeah.
look at, now it would have won, but
It would have won.
nobody can predict what the market will do.
Right.
Yeah,
That's how I'm
exactly.
taking this one.
It would have won, but look at that bar. Nobody in their right mind did that bar.
No, that's
And then look at
And
this.
then-
See how the widening predicted the change in direction?
yeah. And again, it's to keep you out of bad trades. So okay, so what? We lost that one. There's another trade coming.
Yep. There's
Right.
always another trade.
Just don't get greedy. That's
Don't get greedy.
Right.
And then this is kind of the, you know, that bar, here's your price target. Here with all the other price targets. We really don't have a definitive resistance. It's nowhere land again.
Mm-hmm.
But it is a smaller bar. It's 2 out of 3. Look at these narrowed. The data's good, positive, the negative. It has a long tail to it. But and I know this is weird, but my back training has told me that when you get, up bars and then a long bar, and then this one with the target price, much better. It's already hit the high out of the dark bar. This is going to be the first one I probably miss with you guys, but I would take this trade.
I would be in it too.
I'm the opposite. I usually won't take a hammer bar with a long tail on the bottom.
I won't do either one.
Yeah.
The hammer or the hangman. I won't do either one usually. However, it's already been this high on a black bar, and this is a smaller bar. So, well, that's good. I'm glad. See, we're all thinking the same. All right, the proof is in the pudding. We'll.
Oh
my God.
And it gapped open, but I've noticed that if I was going long, my broker would actually put me in, even though it gapped open. If I was going short, it wouldn't take.
Yeah.
Yeah, there's a little bit of a gap in that open, so you kind of have to watch it to be sure you got in there.
Yeah.
Yeah.
But there it is, guys. It's right there. And, you hit your target price. People say, well, if I'd stayed in, I could have won twice as much. That's not how it works. This formula plain old works.
Mm-hmm.
Mm-hmm. Again, don't be greedy.
Don't be. Oh yeah. Oh, greed.
You put your stop and your target in, and you come back the next day. You won 300, 500. If you do multiple contracts, that's $1,000.
Yeah, be happy with it.
Yeah.
Be happy. Yep.
And I think that's when Fred did his initial interview with us each as a member to determine who he wanted to be in his program, he obviously chose people that weren't tending to be desperate or betting with their last $1,000 in the bank. You know what I mean?
Yeah.
None of us were desperate. So I think that was part of the reason he chose the way he chose, and whether or not, everybody, it's 100%, who knows, but there was a reasoning behind that method to his madness, I guess you could say.
Yeah. And
That makes
guys,
sense.
I like my chart all stretched out too. The bar is probably not quite as huge as it looks, but I like to see exactly where I put my support and resistance. So I stretch mine out. You guys, that may drive you nuts. And it still is a big bar, but it looks a little better if I don't stretch this one out so much.
Okay.
No, that's very helpful. I appreciate that. I think we all appreciate that, Karen.
Very much.
Yes, very much.
Well,
So,
Great job, Karen. It was nice to meet all of you. I'm going to have to go ahead and drop, but
thanks for being on, buddy.
And I'm gonna drop out myself. I'm tired.
Yeah, me too.
I know.
Karen,
Thank you all.
See you later. Thank
Thanks,
you.
everyone.
Bye. Bye-bye.
Yeah.
All right.
bye.
Nice.
Are there other remaining questions?
I have 2 quick questions, I think, if you don't mind.
Are you Air Force, Rob?
I am, yes.
My youngest son's Air Force too.
Okay, and I'm a nurse in the Air Force.
Ah,
Oh, I love it. I
so am
wanted,
I.
I wanted to find a group of just
Wow.
medical folks to start out with an alum. So, I'm psyched.
Yeah, so been a critical care nurse since 2008.
Nice.
Very good.
My youngest is in training to fly helicopters, Hueys.
Sweet.
Yeah, he's
That's
wanted
awesome.
to be a pilot his whole life.
Wow.
So I don't want to keep everybody on too long, but so when you back test, I know some people have gone back several years, 10 years. Do you try to stay in like a couple years, or have you found it helps to go back a long time?
No, it's a hindrance to go back a long time, 1 year
Okay.
only, because things change. If focus on just a year, you know, my back testing starts right around the 1st of 2022. But things will change. The bond, go back and look 3 years ago at the bond market. It was an entirely different market than it was this year. So 1 year only.
Second question was, I've been trying to, starting to look at some brokers. I know you do Trade Navigator, so you probably really haven't, or trade Ninja Trader. But
Right.
do you
Oh,
know?
shoot.
Do you know any, like, some people in your group? Do they all?
Yes,
tend to-
they all went with Stryker and Iron. Is anybody still on?
Yes.
Oh,
Yes.
Julie, what did they go with?
I don't know if Julie is.
Oh, you have to have two. Stryker.
An Iron Man or something like that.
I think it's, is that what I told you, Helen? I think it's Iron Man.
Yeah, I think it's Iron Man.
And even Alex had to switch over because of his issues, not being able to trade from Barbados. But I would say everybody's pretty much gone with Stryker and Iron Man.
Okay. All right. Yeah, that was my two questions.
I have a question. I don't know if you can hear me.
Yeah.
Yes, we can hear you.
Absolutely.
All right. The very last bar that you spoke of, where there was a very large bar.
Uh-huh.
Yeah. So do we, if we were to win that trade and we take the trade, would we have the difference where that candle ended or where we had the OCO?
You always use OCO. I
Yeah.
got to tell you, don't ever not do that, because that you will put your stop loss and your price target in, and whatever hits first will cancel out the whole trade instead of letting it go on. So when you, and this is a little confusing, and pardon me if you guys all know this, but it was certainly confusing to me. If I am placing a long trade this day, I would place a buy, probably limited order. You can use market or limit, whatever you prefer. But then your two other trades are sell trades, a sell limit and a sell stop. The same is true if you were going to place a trade on a black bar, only it's the inverse. You would place a sell order, and then your OCO, your two others, would be buy orders. A buy to step out and a buy when you hit your target price.
Now, in this instance where the target price on that, whatever day this is, this one right here. So if I'm going to put on a trade right where this one is, where my cursor is,
Wait,
and then
I can't see yours.
We can't see your cursor.
Oh, sorry. The one before, the white bar before, down there. Yeah,
Yep.
right there. So
Uh-huh.
I place the trade
Yep.
and I have my target price.
Yep.
But then the next bar, it shoots up like it is presented right there. Have I stopped out at my target price?
Yes.
Okay, so that's it. Okay, so I don't get the crazy profit. I just get where I stopped out.
Exactly.
Okay, thank you.
Any
That's
other
it.
questions for Karen before we disband? The meeting went longer than it was expected, but we kind of anticipated that. So I appreciate your time there, Karen, being sick and all.
No,
Yes, Karen, thank you very much.
no problem. No problem.
Thank you. This was so helpful.
Back
Yes.
trade,
Very
back,
helpful.
back trade, back trade, back trade, guys.
Okay,
Strict attention to support and resistance, and swing high, swing lows, and follow the formula. You'll be able to do this. Just
perfect.
take it one candle at a time, evaluate it thoroughly. Place your back trade.
Perfect. And Karen, would you send me that video and then I can share it with other members if they'd like it? If somebody
Yes.
inquires, that would be
Yes.
perfect. And then I'll touch base with you after the fact, okay?
I sure hope we're still recording.
Mhm.
I can't
Yep.
tell.
I can't tell either.
It looks like it is.
Okay.
I see a
Yes,
little red dot.
I'll be happy
So-
to. Now, this is this won't be available forever. So if you want to review it, just follow the link and then download it to your computer. It's a big file, so you won't be able to share from your computer to anybody else unless you get a much better computer than I do. But at least you'll have it that you can watch.
Oh, perfect.
Awesome.
All right. Any other questions? I'm gonna, guess we're gonna sign off at this point. I think we've been on long enough, don't you think?
Good
We
job.
covered a lot.
Yes, we did. Thank you so much for your time again. I know you've not been feeling well, so appreciate it.
No problem. Happy to help.
Everybody
Okay.
have a good night.
Thank you so
Thank you
Night,
very
all.
much.
Thank you for
much. Good
attending.
night, everyone.
Bye.
Bye.
so much. Take care.
Alrighty.
Okay.
All right, I'm going to, you okay with how it went, Helen?
Yes, yes, perfect.
Okay,
So, okay, I'll just touch base with you then. You know, we can exchange some emails and you've got my phone number as well.
yes. And
Okay.
this is going to take time to render, so I won't be able to kick it out to you till tomorrow.
That's fine. There's no rush on that.
Okay,
So, thank you so much.
absolutely.
Have a great
Alrighty.
night. I hope you get to feeling better. It sounds like you're on the mend.
Yeah, I'm gonna get some water and go to bed.
Good, good. Thank you again. I'll talk to you
Okay.
soon. Bye.
Bye-bye.